Hello everybody, I'm here with Pouya Ghomi, who is the founder of Property.ca Group. You're a growing team and you see so many things on the ground, and what's on everyone's mind is this anti-flipping tax. What exactly is that in as little words as possible?
Good question, Paul. It's a new tax just introduced by the government of BC, and it's going to affect a lot of people, and I might add, in my personal opinion, in not a good way. So anti-flipping tax is going to be if you sell a property in less than 2 years after you purchased it, the government going to tax you 20% on any profit that you make. And just so that we're clear, this is on top of another flipping tax that the government introduced a while back, and they said any profit you make from selling a property, it's not capital gain anymore. The government going to tax it as if you made that income normally. So rather than 50% of it being taxable, now all of it is taxable.
Right, so if I make $100,000, now my T4, my T1 says 150, and I get taxed at whatever, I think it's close to 40% on that, right? So it's as if I made pure income on that. So,
exactly, pure personal income on the full amount.
Got it, and now, so on top of that, there's a 20% on the capital.
There is a 20% tax on top of it.
On the capital gains in this case.
On the profit made. So they didn't announce how they're going to calculate the profit.
Okay.
We just know they said on the profit.
Okay. Right. So so if you so there's some people who have to basically sell pretty quickly here, especially if they're Airbnb owners, people who have no interest in holding either an asset that can't make the right money that they wanted, or they might be stuck with a legacy tenant and they've got a high variable rate. So this is when, January that this kicks in?
January 2025.
Okay, time of recording, we're like not even 10 months to getting there. So if someone does not sell before January 2025, and January what? January 1st or?
January 1st, 2025.
Okay, at the new year, if they don't sell by then, it's January 2nd and then they sell. This is retroactive, right? So if they bought their house January 2nd, 2023, they're still within that year time frame, I believe, right?
Correct.
Okay.
So the first year you're going to get taxed 20%, the full amount. The second year is going to be like a sliding scale. So they're going to prorate it to how many days of that second year you hold on to that property.
Oh, interesting. Okay.
Yes. And after 2 years, it's 0%.
Got it. So wow. So how's that impacting some of fellow investors who are looking to, well, I don't know, upsize, downsize, grow the portfolio? How's that affecting people
I think
out there?
it will affect, if you are a person who are buying a property to live in for the next 3 to 5 years, then you don't care about that.
Yeah.
This might even make some inventory more available for you because some people have to sell. But if
inventory.
you're an investor, a person who bought the property to hold on for a year or two and then sell, well, this will impact you. If you bought a pre-sale, I think the most people going to get affected are the people who buy a pre-sale. If you bought a pre-sale and you completed the pre-sale within the 2 years of you selling it, then that's a problem, because you're gonna now, if you buy a pre-sale, you're gonna have to rent it out for minimum 2 years if you don't want to be subjected to this tax.
Right, and so if someone's assigning a pre-sale, does that count?
So they say it's gonna, I'm not sure about all the details of the assignments of how that's going to be.
Yeah.
But I think the completion dates for the pre-sale counts. So if the new buyer is getting the assignment, wants to make sure that they're not subjected to that, they have to keep it for 2 years before selling it.
So it might be harder to dump if you're wanting to assign it and you don't like where the rate's at.
Definitely.
Wow, so that's a bit of a mess. So what some I don't know, solutions or things people can do that have just bought a property and aren't sure if they're going to be holding it for the next couple of years?
I think that would put all of those people on a timeline, because basically, as you mentioned, you have 9 months now until the end of 2024 to sell a property which you bought within the past year or so, and you know you're not going to keep for long, right? If you're on such a timeline, the best course of action would be to sell the property and get out. The government made a few exceptions to this tax. So if you get divorced, if you have a death in the family of a property owner, if you fear for your life due to some, I don't know, unknown hazards in that neighborhood and you have to sell.
That could be maybe embellished a little bit. I'm curious what the application form is going to be like. But I get it, yeah.
So there are a few exceptions, but apart from that, and the biggest thing that I think is going to affect is that we have business people who do renovations, who upgrade these properties that most times they're not even livable. unless somebody renovates them. What about that person? If that person buys a property to add some extra value to it and sell it to somebody who can actually live in it now, now that person would be subject to extra tax. What are we going to do to that now? We're going to have a lot of old properties that nobody wants to live in, and everybody's afraid to buy because they cannot upgrade it and put it back on the market.
Wow. Well, that's going to be an issue. So teardowns are not going to be much of a thing now, right?
I mean, the tear down is a thing because probably your building permits and all of that will take a while. But hey, if you're buying it to renovate it and put it back on the market, a lot of these older houses, yes, it's 50 years old, but with a little bit of a love, you can live in it for another 20 years. But now no renovating company will buy that and make that renovation unless the end user buys it and renovate themselves. So I think that's an issue too, that the government has to find a solution or make at least some more exceptions for that.
Makes total sense. What are some action steps in terms of ways people can get in touch with you, and maybe some last words on what people can think about now that they're trying to reconcile that there's these two anti-flipping taxes? I mean, especially if they have an Airbnb, there's another tax that was introduced recently on that. So some people are getting sandwiched badly. What are some last thoughts or things they should keep in mind before getting in touch with you?
I want to say, if you own a property and you're not sure you're going to keep it for a long time, definitely speak with someone regarding what are the impacts, specifically the tax implications of that. The government hasn't announced all of the rules yet. We are waiting, as everybody else, to see what are the exact details. But by the time they announce it, you may not have enough time to make a decision to sell the property or get out of an investment you are not very sure about. So my suggestion is get in contact with a professional, explain your situation, and try to have a plan in place before the timeline is too tight.
Yeah, and make sure you get that financing down too, right? Because if you're upsizing, you got to make sure you can stretch. So obviously that's where you get in touch with us. You got your award-winning real estate team here. Pouya, thanks for having us. Thanks for being on for today, and we'll continue this conversation in the
Thank you so much. Thanks for having me, and hopefully this will help everybody make the right decisions for the future investments.
Definitely. Good luck, everyone.
Cheers.